Hello, hello, hello. Morning, morning, morning. 1 second, and then we'll begin. I am I'm back. So morning again, guys. Morning, morning. Another day, another rally from Nasdaq. Nonetheless, we're not going to be rattled. Stay focused. Enough jokes. Let's go in. So Wednesday, 2 p.m. There we go. New trading day started. We can see that we haven't gotten down there.
They didn't say on the overnight moratorium, but it would be worth
Learn from
investigating.
me there. 720.
So, well, it just says they sent 19 skips.
Mm.
So, it doesn't say. Yeah, it would be interesting to know what happened to ARD there. Right? If they had the carpet or they just received.
Okay, so this is something that we've seen before. We have a one-sided day. We have two one-sided deliveries here. What we also have is a whole lot of sell-side liquidity untapped. So just eyeballing this, it makes this leg of price, what do you call it now? The portion that my eye goes to first, this leg here. It also says that since this is the high of the delivery right here, this is the last time liquidity was purged. So whatever consecutive, then like consider this like a bullish week. If we had like a bullish week, this would like be Friday high of the week again. We have seen this exact delivery before where we framed if this is bullish, it's going to be printing support structures at the high and then failing. In this case, it is different so far because we are below the delivery here. We can see its most recent highs and low, and we can see 720. So precursors that suggest continued bullishness are going to be price closing above here, reaching for this, put a down candle here, close above it, it's gone. We traded this exact delivery on a call a couple days ago, which also means if you remember from that call, we framed two scenarios. Run up here, support, close below 720. There we go. So nothing is different here. It's just that it's the same framework, and we're looking for which of those two deliveries we get, and then we take a trade. Going back to what we looked at over here, Here. Anticipation for Nasdaq. Reach up, run the liquidity, break lower, life is good. Bitcoin, which we anticipated would have been doing the same thing, is now above that liquidity pool. So if money flow is continuing, and that would mean Bitcoin profits are being repurposed, and these are the places that it should be going. We talked about this on one of the calls. And when I say this, I mean the likelihood that it wants to run here to print an order block and then higher prices. So now that we are here, I'm going to move this line here temporarily. Just added another one, but why not? This is now my oil order block. So from a daily perspective, CSD, we haven't gotten a CSD yet. And I'm going to still be looking for 50% of this range here to be traded to. So this would be like internal liquidity sweep then. There we go. So oil, gold is where the money should be moving into. And then NAS and Bitcoin is where the money should be coming from. If that continues, it means oil and gold higher, NAS and Bitcoin lower. So with that wind behind us, it means when I'm looking at here, I'm going to be looking for what supports that idea. And I want that to be confirmed and anything else to be invalidated. So for bullishness, order block here, same thing like whichever day that was, probably Tuesday. Today's a Thursday. Yes, today's Thursday. So Tuesday we got that buy setup. Same thing here. If that happens, we look for longs. It's at 720. I'm looking for it to show me bearishness by invalidating bullish order flow, which is to close below here, put bodies below. Now that we have an up candle here, CSD this guy, and I'm going to short, stop above here, amen. Just like that. If for any reason we stay inside here to here, between now and let's say equities open, and this low does not get taken, specifically we don't take this low, then that opens the door for this high being run like this. So let's say equities open comes in somewhere over here. It opens the door for that type of delivery. I don't mind this. I'd actually prefer this. I'd actually prefer something like this. In terms of risk, I don't think this is carrying any great degree of risk. So while I'm watching this real time, if I get a close below 720 open and this up candle, I'm going to short this with reduced risk and accept the potential that I could be early. I'm going to short that if it prints. If we don't get a close below this candle, then I won't touch it. Between now and then, let's see what's going on. As far as news goes, there's news today. There was news today. Unemployment claims is really news. But nonetheless, what's this saying? The forecast was for 221,000, and we got more unemployed, which should mean less purchasing power, which should mean less money to invest which should mean less money to buy stocks, which again should mean lower prices. So everything that I can see so far on all time frames, in particular the M4 and the daily, is suggesting lower prices. Economic conditions also suggesting lower prices. I am anticipating that the high on NASDAQ or the high of this retracement is in. We should have a whole lot of downside over the next couple of days. It's at the interesting place now where I feel like I could get away with a short, but for risk management purposes and to not. How do you put this? Not, well, apparently not everybody is okay if you take a loss and then you make it back. So, under normal circumstances, I would sell this anticipating the close, especially because we have so many things here, or two things here, that to me, if I get that close, it supports bearishness. This is ahead of the confirmation, but based on the fact that this is closing below 50% of the order block I'm looking at, I like selling above the open of this candle. So I'm going to size down for the sake of completeness sake. I'm going to size down and I'm going to short here, not expecting it to be a grand slam anything. I'm simply shorting to get my feet wet. Okay. You don't have to short this if you're uncomfortable with the risk, but everything from my rules and processes, I can short this in anticipation of what I'm expecting. So there we go. Put that short in and I'm waiting. Confirmation again is going to come from closing below here. I'm fully aware, okay? I am fully aware that I'm entering this before that confirmation, and I'm okay with that risk, okay? There is no other explanation as to why you're taking that. That's the why. I'm taking this because I'm comfortable with the risk on this trade in anticipation of what I'm expecting. So now it's just patience. Now let's talk about, since we already know, right? It's abundantly clear if you share the bias that this is likely bullish. Support structure at the high. If I don't get that, I want to focus on this push here, this imbalance here. And I want to see that give way, and that would lend very well to my analysis that this bit of price action in here should be the target. So if I'm being realistic about this short, I am not going to be trying to get a 1-to-1 or a 2-to-1 or something like that. The RR doesn't matter to me. What I'm looking at here, even if the RR was negative, it wouldn't matter to me. I have accepted this risk. I've sized down. A loss there is not going to tickle me in any way, shape, or form. The only thing that could tickle me here today is if I don't get an opportunity to put adequate risk on this trade and it plays out without me. Yeah, that's going to tickle me. Getting this trade with small risk is not going to have me feeling like, oh my God, I did it. No. I want to get paid, so I enjoy coming to work. There we go. So that's what I'm looking at. Looking at these lows in here, and I'm looking at something setting up pretty soon. And then that's it. Retrace towards the open, correct this, and then I'll factor in something over here afterwards. For now, this is enough of a range to not need to focus on anything else. So yeah. I guess the folks who like midnight open could put midnight open on and say, yay. But not necessary for me. Equities open coming up in 45 minutes. Doesn't change what I want to see here. Awful quiet.
Just getting situated. How you doing, Kish?
I'm doing good. I'm doing good.
While you babysit the trade, can I ask a question about the trade we did 2 days ago? You remember, let me draw. We were waiting for equities open. We had a down candle at the top, and price was like here, and you were mentioning that maybe after the volatility of equities open, we could, take this high, sort of mitigation, and then start the movement we were anticipating. So my question is, let's say you have a candle at the top of the range that you are expecting to work as a, let's say, order block, right? Because price is moving down, and you expect this to be the start of this movement. My question is, how do you know, or how can we anticipate if there is a need to mitigate the order block, or maybe it just stays, untouched and the movement started?
Okay, that's a good question. So first thing for me is this. Mitigation usually comes in after a very pronounced element of manipulation. And what I mean by that is the market's quiet, and then there's a spike. It's either a spike on time, like equity is open, or some volatility driver, or a timed range delivery. You're looking at price and then it just spikes. There's no news that you can justify, and that's why you can know that it's a timed element. When that spike happens, you're watching for where it reaches for, and you're using kind of like an hierarchy that says if we have liquidity and the liquidity is taken, your PD arrays are formed where when liquidities get taken or when the orders are being filled. That's where PD arrays get formed. If we have the PD arrays formed and then the market invalidates the PD arrays and still stays above it, that's when you can say, okay, this is clearly not trying to stay below. Like, let me draw something. Let's say you have a range high and low. The run above that range high and low creates your order block in here.
Yeah.
And you want to see that order block CSD and then lower prices. So let's say you get the order block CSD. You're looking for lower prices. And the market, stays inside the order block. Then it runs the order block. I'm less interested in the fact that order block was run already and more interested in, since it was run, how can I engage with price? First thing I'm looking at, that last push, and I'm looking at elements inside that last push for confirmation that whatever caused the spike is out of the market. So I'm looking at the down candles here, kind of like a breaker. Hit the open price, lower.
Okay, and let's say there's always a chance that you're wrong. So
Actually, we can't
you
move
at
price.
yeah, you knowing that you're wrong would be they taking this high again, for instance.
So me knowing that I'm being wrong would particularly be if orders are being mitigated, the down candle in here should not have a close above it. Once we close below, that open price should keep price lower. Full stop. Way
The open
before the
price
high
of
gets taken. Say that again.
the open prices of the down candles here, right?
Yeah, right, exactly right. Let me
Okay. Once
down
we
candle
close
right here.
below, yeah, we shouldn't go up. Okay, okay.
That's right. Once we close below, I want to see that open price keep the market below it. Full stop. Once
Yeah.
that's happening, we can say with confidence the orders that came in push this higher. Put that in a red. I can. This is being mitigated. So you want to pay attention to the down candle before that move. I'll go as far as to do this for completeness sake. And then lower prices. If
Yeah.
this is failing to hold market, then clearly it's not being mitigated. It does not need it should not need this high taken after this invalidated for you to say, okay, I was wrong about that setup. The
Yeah.
moment
Sorry, go ahead.
no, I'm saying the moment the things that should hold start failing, be open to the idea that you could be wrong.
Yeah.
Not before. So there are times when we're trading live, like on a call or we're talking in the group, and I'm saying stuff like, I'm holding this despite it looking like it's going against me. It's not stubborn, it's not hoping. It's just that I'm watching the things that would make me feel wrong. And then if those would print, then I'm cool. So similarly here, I'm looking at this as the high of the delivery. Okay. So that means there are two scenarios that I like to see when I have the high printed, a run on stops, and then we pull back. So that was a stop out for me. Full stop there. There are two setups that I like to see. Number one is this. You have that high, it's run, we break lower, retrace, and it's gone. Okay? What just happened? Oops. And then you have this. Does whatever. And there's a high in here. It takes that high, and then it moves. So that's why I'm saying there's two things that I want to trade here. One, short here, or two, after equity is open, a short when that high is taken. Nothing in this process for me says that I should look for a short above this high. So let me say that again. In this process, nothing says I should look for a short above this high. Full stop. So if I'm framing that I don't want to see this high get taken, and I'm looking at all the things inside here that supports lower prices, if this spikes above here, I'm not looking to short that. Like instinctively, I don't want to short that. If it's happening at a time where I can understand that, okay, this is like a volatility driver, or this is something, I'll consider that short. I will consider that short there if it's on time. So like yesterday, I've shown you a million times that how do you put this now? If I get to the market and I have no plan, no process of what to do, I'm going to trade around 8:32, 2 minutes after it is open, full stop. So if I'm looking at something and equities open spikes and it clearly takes me out of a position, but the spike is not showing any kind of commitment, then in my mind, I'm thinking, okay, since equities open was a spike, and we all know that equities open can spike and then do whatever. I'm now looking at, can I get back in at 8:32 for something beautiful and then go short, which is what I did yesterday. Let's talk about this trade right here, because somebody, if you took a loss with me here, if you did size down like I did, you're not overthinking, okay, it was a loss, full stop, there we go, no big deal. But if you didn't, or I don't know, something, you're probably looking at this and you're thinking, one, do I still go short? Something, something, something. Completely irrelevant in my opinion. If I asked you, if you take a look at the setup, does this look like something that says we're clearly bullish? So that stop out was very, very justified? No.
No.
If I'm trying to nitpick and figure out because I can't stand the idea of being wrong, I'm going to justify everything in here that could have meant bullishness. And I don't do that. I don't want to do that. I gain nothing by doing that. So we're not going to hold any type of funeral processions for this losing trade. It's a loss and that's it, full stop.
Kish, but coming back to what you were saying. So let's assume in the next couple of minutes or whenever actually they start closing below this. This is like your 100% confirmation will go down because if this was the manipulation, mitigation, whatever, closing below these candles would be like, you know, this or this. Is that your confirmation?
Yeah. So
because you were mentioning this candle, but I think it's because of time. But structurally, this would be like closing below this perfect because we're raking this FBG, etc.
Right. So that's why I'm saying I'm taking this because I understand that I can get in ahead of confirmation. This is an instance where I tried to get in ahead of confirmation and I got wicked out. It does not change the fact that I'm still going to short this. Why? Why am I being stubborn? Because nothing about how I was stopped shows convincingly bullishness. That was improper, not structured correctly. Nothing about that shows convincing bearishness, bullishness.
Yeah.
The only thing I'm looking at is, and I'm thinking, the stop was pretty tight. Maybe, just maybe, because I had sized down, I could have given this some more room. That's the only thing I'm thinking about now. Because you all know I like the idea that 20 points on a stop should be good. I'm not saying anything outside of that fact. 20 points on a stop is always nice. Whenever you wait for good setups and you frame them properly, 7 times out of 10, a 20-point stop is so much better than anything else. So I'm not going to change that. So, being realistic now, I'm looking at this and I'm thinking, did I just get wicked out and then it's going to occur? I'm not FOMO, like not from a FOMO standpoint, just from a maybe it was just a little bit of a weekend, that's all, no big deal. I still know what I want and I'm going to wait for it nonetheless.
Yeah, but not FOMOing the, correct me if I'm wrong, but the right process, right way to think about this is like, okay, they're showing some intention, the inside being stopped, and they are here. Let them close below here, and then we can chill again.
Absolutely.
Okay.
But I want to make one comment on that statement and say correctness in trading is always political. What I think is correct is not always what somebody else thinks is correct. Yeah. Somebody may think this is the stupidest short they've ever seen because it failed. On the other hand, if it had played out, then the conversation would have been different. So I don't justify a win or a loss after it played out. Once I can see what's happening before the trade plays out, those are the things that I want to put or give light to. I don't need to see it play out to feel good about it. Once the process is there, once I can see all the things I need to cook, I'm not going to justify that this was the right way to cook it based on the fact that, you turn the stove off and the meal is there. Nobody does that. you base whether it's a good meal or not based on if you use the correct ingredients and you know you adjusted the heat as you should. So yeah, I'm still loving the idea of a short here. Absolutely, 1,000,000% loving it. We just got that close below the level that I wanted, but it's, well, 720, but we haven't really CSD the order block yet. So give it a little time, no big deal. So as I'm doing this, I'm thinking about the two things. Did this initial spike, so we opened and you had like a initial high, initial low. Did this spike justify a need to not go higher anymore? Is equities open now going to tank and I have to focus on getting an entry down here? Or again, is this going to hold between these 2 points that equities open? Then those are the only two things I'm looking at here. Which could potentially mean that I sit here on for the next 30 minutes and I don't get anything. But we will see. Either way, just another day at the office. Just another day at the office.
And regarding the question that I asked earlier about the OPs being mitigated or not, could that be something related to what in the past you mentioned as other blocks before MSS get rated?
It could be, but again, even if there's a process or understanding that I'm fully aware of, if in real time I didn't factor it out, I'm not one to like validate. No, I don't validate being right. I don't validate being wrong. But it's possible that that's what was happening, but I did not factor that in. What I factored in here is this. I think I'm wrong about being bearish. The support structure prints at this high. Nothing else. Nothing else. The only thing that I guess in my journal later I'm going to say is I factored in the fact that between 720 and equities open, that range high could get run before I get anything beautiful. And I took a trade inside. It didn't play out. And then afterwards, provided that it prints the way I'm expecting, after equities open, we get a run that sweeps this high and then it goes lower. It's still not going to change the fact that if I see the setup again, I will take it.
Yeah.
What I will do, for sure, what I will do is, assuming it prints exactly the way I want, I'm going to look at where I got confirmation that I could go short here, which is here. And I'm going to look at how far did it rally and how big was that range. And I'm going to use that as something to look forward to. If the ranges fall within a certain size, how deep are the runs and stops? That. Outside of that, I'm not doing anything else. Anything crazy. Oh, it's open, not closed. 488.1. I was just looking at the open price of this candle, since what I want for bearishness is close below 720 and then close below this open, and I can short. I can clearly see that it closed below 720 here. So I was just curious if it closed below that open price, but turns out it's the exact price. Nothing to psychoanalyze there. It just didn't close below it. That's it. What I do like is the fact that so far the order block is like figured would be short. We haven't closed above it here yet. Let me not say yet, because I'm not expecting it to. But I like the fact that we still haven't closed above here, which means the analysis that I started with so far, in my mind, is still solid. So I like that. Bam, 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 bam. Instinctively, that should mean if this closes as a down candle, next candle can be a short, but I'm not going to take it. I'd rather walk instead of rack up small losses in the name of trying to get in early. Let me take this off. Want to see where this closes again. Once I see that close, it hints at the potential of the next candle being what I want it to be, namely closing below here. But I will not enter in the next M4. I will not enter, but I'll watch it nonetheless. So it didn't close inside here. See, it did not close inside that down candle. So now clearly, the idea of selling into this candle for me, even though I wasn't going to take it, is not on the table. Nothing to do but wait.
It's easy to know when David's not around. Wow.
He's not here.
I don't think so.
Let me see my stapler. No, he's not here.
Hello, Kish.
Hey,
Yeah. How you doing first? How's the family? Hope everyone is good.
yep, all good. Pretty quiet.
Amazing. How was the celebration? The beach day yesterday was it fun?
Oh, it was hot, but it was fun. It was fun.
Did you get a
Always
good?
nice to see a crowded beach. Kidding. But yeah, it was fun. It was fun.
Did you get a good view, a good sit like you wanted? Oh no.
Absolutely. A long drive in the night. Didn't get
Oh,
home until like 1 a.m.
amazing. Just a quick question.
Hmm.
So I think either the second day or maybe the first day you were talking about the fact we had something similar. I think that was I think on Monday,
Hmm.
whereby and you told us that when you were talking about the fact that we were going up, and you mentioned that when we were I think that was a call we were contemplating about OB or not OB, and you were like, this kind of candle is just a stop one. And so because of that, you needed an OB. You might have mentioned this, but I came to the call some minutes ago. But
Hmm.
in this instance, wouldn't you want like an OB here for price to come back, go to, and then go down if you're bearish? I'm
So,
bearish, okay, but I
okay,
have this above me as reasons why I'm currently in a short, but I'm telling myself reasons why it may fail might be because of this. And I picked that up from that understanding, I think it was on Monday. So I wanted to.
okay. So that's fair. Um, I try to not look at interfractals first
Okay.
because we all know what happened when you just look at interfractals first. You try to justify why it should be there and you get cooked. So I try
Mhm.
to look at the narrative behind why a particular direction should be favored first, and then I
Right.
look at what information is being provided that justifies why an interfractal should print somewhere. So
Mhm.
I love what you did in terms of explanation, in terms knowing where the order block should form. No problem, no problem. Like I like it. It's something that I do look at, so no problem. But I'm looking at this more importantly. So this 6 a.m. candle. In my mind, this 6 a.m. candle purged all the highs here. This specific candle, like from what I can see here, it purged the highs. So that would mean if this is the purge higher, and I'm looking for the open price of the down candle before this, it would be this candle. Yes? Before that
Yes.
run. So then that would mean once we close below here, it's going to keep the market lower.
Mm.
So we had closing below, up candle printed, and we close below. Since it's up candle printed, there has been nothing that significantly invalidated here. So if I was
Mm.
going to look at anything for an order block, this would be it. But this setup here, in my humble opinion, does not require me looking for an order block to the left,
All right.
in my opinion, and I'm going to explain why. If we had run that high and we were still above the open price here, then I'd be interested in an order block because then it would be showing me that since the start of that push higher, we've made no run to go below that delivery, or we've made no attempt to go below that delivery. But if I can see that the stop run is done and we are below that, the start of that specific delivery, then it should invalidate the need to want to see the market go above here to print something.
Okay.
So might be a little bit confusing, but let me see if I can draw something. I like to draw. Let's say high to low is a range. We open inside here. We run that range. That's a purge. We're looking
Mhm.
at below here. If the market gets below there, and when I get to the market, we are here. I'm thinking there must be something above current market price, and I'm specifically drawing this point above the start of that spike. There must be something above the market that it came this far for to use as resistance for lower. Now, flip the script and look at it like this. There, pull back, same spike below that level, and we're here. When I look above me for something that this could reach for, this is what my eyes go to. So that must mean something in here between that point and where we are is going to do that. So take a look at this. This green line over here that I framed in the beginning. I mentioned this range in here before equity is open. If it fails to get down here, then automatically I know what an ideal short looks like. It's going to be a run above these highs and then lower, like this.
Yes.
But getting rid of this is not the only way that this delivery here is not the only way that that fractal can print. Sounds weird. Let me draw something else. Let's start off the fractal the same way. I, and it's run. And then we have this inside here. In this delivery here, I focus specifically on this spike sweeping this internal liquidity. Mitigation price level or breaker. Same thing. Same as this. Same steps. This high created, it being run, close below, staying here, spike above it. The only thing that's different is where the spike went to. So for me, I understand that most persons like to be precise in their entries because entry fractals is the everything, right? For me, it's not like that. You've seen every fractal fail already. It doesn't matter what the entry fractal is. It doesn't matter how many trades you've won with that fractal. You've all seen entry fractals fail. So the important thing is to understand under what conditions are certain entry fractals or entry patterns or fractals likely to play out. Which is why the moment I saw this being run and this being down here and us opening, there, my mind automatically says, we're going to open, new ranges are going to start. For immediate bearishness, it's going to wreck here, red open, close below this guy. That's it. Full stop. In the event that it does not do that, it means it's going to hold and create a range between here and the equity is open inside these two price levels, and then it's going to run them. In a perfect world, I want the run above these or this range to not go beyond that high. Full stop. But if it gets like a wild equities open spike, I'm going to view from the start of the down candle, in this case, this down candle, all the way to whatever spike happens, and I'm going to pay attention to the open of that guy as mitigation. That's it. I don't need to do anything else. Now, here's something that always seems to go over heads in the calls, and I have to explain it, and then it makes sense, which shouldn't be the case. If we get to a chart, and in lifetime, I outline that this thing, or this pattern, or this level justifies being really confident in the setup, and we don't get that, and I choose to take a position, and I'm saying the probabilities are less, I'm sizing down, I'm just okay with the risk here, all of that. There's always at least one person who takes that trade, but they don't have the same expectation as me. Like I'm taking it saying I'm okay with this being a loss because clearly I don't get what I want here. I've not gotten that to be super confident. But there's going to be somebody else that takes a trade under the expectation that it must print no, even though this hasn't happened. So these persons may or may not take a much bigger stop than I have. And then they feel hurt about it. Maybe it's you get close to your max drawdown, maybe whatever. And my thing is, almost everybody here has likely seen me trade live before, so there's no magic to seeing this. You can always tell my confidence about a setup by the size I put on and how I explain what's printing live. So if I'm not giving you the impression that I'm willing to put over 100 lots on any particular setup, why do you think it's okay to hold on to one of those trades? So let's say I'm telling you I'm sized down. I clearly say I'm taking this is reduced risk, or I'm not putting full size here. Whatever word choice I use clearly says I'm not taking any unnecessary risk on this. I'm taking a risk because that's what we do, but I'm not taking unnecessary risk. Why would anybody think it's okay to open up a stop on a trade like that, then take a larger than necessary loss, and then cry about it? At some point, we have to remember that this is not a game. Like, this is not a game. I don't know. I don't know if persons are just used to, you know, losing so much that they're just numb to the pain. So everything is a hope. Or maybe you've lost so much that you don't think this is likely to, turn around at any point in time. So you're just craving that fix. You're just craving something that validates your efforts. And I get it. We've all been there. But famous last words are notoriously famous last words for a reason. You have to hold yourself accountable to some degree. To some degree, you have to say, this don't make any sense. It's one of the reasons why conversations with David are always stimulating, because he will tell me how he feels about a particular setup, and I will tell him why I feel a particular way about the setup. If his process says he should trade against me, he will trade against me. Whether it's a winner or a loser, he will trade against me. And I'm fine with that. I can't move markets. I cannot move markets. But it also means that if anybody is trading and the risk on a particular setup does not feel comfortable, leave it alone. What you can also choose to do is get in the move late. Doesn't sound as bad as you're thinking. Yeah, get in the move late. Let's use this trade, for example, just because the information is right here. Let's say I go short here. Above this candle's open, right? Clearly, as I said, putting my stop up here. So the stop is very, very small. Again, clearly, as I said. And I'm telling you that confirmation comes from here, but I'm going in early because I'm fine with the risk. So if I take two trades here, this is the first one and it's a loser. The next trade I win is 100% going to be greater than 7 points. 100%. What if you can't afford to lose 7 points? Don't take that 7-point trade. Wait until you get the confirmation that I'm saying makes this higher probability, then trade. It's not a disservice to you if you don't follow what I say blindly. It does not mean that you don't like, love, or respect me. Just means that you understand that this is a dangerous game. You have to protect yourself. But yeah, pulling up on equities open, and again, this range so far stayed inside here. Okay, no big deal. We talked about that already. The equities open spike is what I'm looking at now. In a perfect world, that spike does not go higher. Equities open spike goes lower, and if a pullback is going to happen, it happens after equities open. How long after equities open? To be discussed. But anywhere between equities open and the new hour, I would say give or take 15 minutes, just to be all encompassing. Between equities open and 15 minutes afterwards, look for that pullback, provided that we spike lower. That's it. So now we wait. Hopefully the conversation made the wait a little less.
Thank you for the
Painful.
explanation. I think maybe when I watch it later, I would, because I also know it's very similar to if the pictures makes me remember when you were teaching us about the deliveries. I think is it the 4 or 5 ones you shared, and all of a
Yes.
sudden this looks very familiar to it. So I think I just need more.
I was talking to somebody last night and I was saying that my plans for August was really to try to help persons navigate, since I'm expecting it to be difficult. So far, it's proven to be relatively difficult, regardless of what some persons might think. I think August is relatively difficult. I've had a red day, and I've had when I say a red day, I mean an actual red day, like a decent red day, and I've had a small red day. Yesterday, I gave back my profits because I was looking at a PM session short, and I could have left that trade up a little bit for the sake of just feeling something, but my process said this should be something I can do, so I held, and it came back and attacked me. Okay, no big deal. I was looking at the short last night. Last night when I saw how deep that retracement was, I said this could be a decent short setup. Again, I shorted and it ran, and I could have taken something off. Didn't. Came back, stopped me out. No big deal. No big deal. Here is the M4 candle that drives into equities open. May it be brutal. May it get below here, spike, and then pull back. And then, for the love of Christ, somebody please try to not be a degenerate before we actually get a decent retracement. Don't try to validate anything here. If it's just gone and it gets, where's the objective? These lows in here, so let me put that on for the sake of.
Good morning.
There he is. Coming late, saved you from my initial 7-point stop.
Oh, Lord.
No worries, no worries. We have 1 minute. Looking to see something like this, Mohan. So once I saw this, I'm looking at sweeping Monday's high, leaving Friday, sweeping Monday's high, and then tanking.
Just because Friday did the purge, you're not expecting Friday to be taken out again?
Exactly, just like that.
Okay, cool.
But I saw equities 720 open, which is the open outcry open for anybody who's still curious about it. I saw them showing willingness. Yes, it's weak rejection. I know. But when this closed, I felt this would have been sufficient for a short here. So I short, put a stop here. And again, in hindsight, the stop was probably too tight. And I got taken out.
The news did absolutely nothing.
Exactly. And that's why I'm half thinking or half expecting equities open to be wild. It should do what the news didn't and just drop.
So if we take out Friday's high, Do you have mitigation ideas?
If we take Friday's high, I think mitigation for bearishness, but I don't want Friday's high taken. I want Monday's high taken.
Okay.
Yeah. So here's everything's open. Do the spike that the news should. We're focused on that level. And there we go. So this will end at 8:32. And then we all know that if 8:32, they're rejecting 8:32 low at that level, it might not necessarily mean good for shorts. It does not mean get scared, but it does not necessarily mean good things for a sustained short.
You be buying the retracement?
No, today is not the day to buy the retracement for me because the range is not, I can't get 50 points from that. Demanding 50 points from that is going to be me. So the price level is, let's say, roughly about 70 to 50. And then this is smack dead on 50. I'm going to have to get perfect entry and exit here, or this pushes drastically above here for me to get something sustainable. So in cases like that, where I can't frame the setup to get 50 without it being animated, then I just want 50. It's not that 50 is there. I just want 50. 8:32 is here now. So let the aggression begin. And again, lower. I want to see lower first. Leave higher for a bit. If it's going to go higher, in my humble opinion, how I'd want it to happen is pulling early sellers and take them out. So the spike lower first. That's why I'm saying I don't want this is open to push higher. Spike lower first.
$7.20 is
You're
like
in
a
rate.
wall. No, I'm
Oh.
not.
Man, you're brave. Some of that Miami man. Okay, so we're above 8:32 high now. This is where I'd like to see, I don't know, something happen. This is the first place I'd expect something to happen. All right, so 8:33 is about to close. What are the chances I can get there with a short here? Find out on the next episode of
Flip the coin.
Flip the Advanced Guest Theory, flipping the coin. Just
No CSD.
pop
Still
the M1
waiting.
real quickly for you. It's M1. 8:32. Bam. I love to see if this M1 does not close above here, and I'm going to I can sell the next one without a CSD. But we are above 8:32 high. Let's see something bearish.
All right, let's go.
Sounds like you sold one.
No, I'm waiting for this candle to close.
Rules will always keep us in check. Doesn't matter if it takes long.
All right.
Whoops.
No wick.
bad. That is too bad, but justified, in my humble opinion. Exactly where we thought it would happen, exactly on time. This is exactly like that. That was the short or buy I took yesterday. We just snapped that equity open and did that. I don't give it a little bit more time. Don't rush into this one. Don't rush into this one. I know it's there, but don't rush into this one.
Got a horrible entry.
I figured it was dancing on my phone.
My entry is like here.
Whoa. I thought you were watching this candle.
Yeah,
Mhm.
fumbled it.
Ouch. Don't worry, we have enough time for it to give you a better entry. If they're going to pull it back. If they're going to pull it back first, there's enough time here to give you a better entry. But it's gonna be a great one.
Is David here?
No, I haven't seen him.
Oh.
A little bit more from dance class. Dance, dance, dance. His network still closed. Jokes at David expense. I'm gonna check in to see if he's okay. So you should be getting your better entry. Come
I can't enter again. I'm all on my
Oh,
11
oh.
size.
All right, let me see if we can give you 20 before it goes back up. Candle Whisperer.
5, 6, 9.
If it starts looking uncomfortable, don't wait for a stop one. Okay. Still
Yeah,
have
I know.
yeah, still have a little bit of time, and I don't want this to because
I'm watching this up candle. If it breaks, I'm
see, here comes your better entry. All right, so I'll give it one more spike and then playtime. It's a whole lot of
I
heart
just
and patience.
took me out.
It just took you out.
Yeah,
That means you didn't hear when I was saying wait for a better entry.
yeah, I got my entry at where this
Here?
red line is. Yeah,
Okay, that's good.
and my stop was above there.
All right, it is officially time to party. So this volatility should break close. So There's a spike. And now we can go back lower.
Ah,
You
stopped.
got it again?
No.
Oh,
Waiting
okay.
for the next trade.
Okay, cool. Don't worry, this is going to be the next trade.
I mean, it's going to be my last trade for the day.
No, that's fine. This is going to be that trade. That's what I was saying. It's give it one more spike before you get your better entry. So let me put an
Would
entry
you
here.
be looking at mitigation ideas before selling?
So I'm expecting mitigation ideas. So I'm selling now for mitigation ideas. Because
Oh, okay.
if you go back to M4, see how far away mitigation is? I can get away with that. Strongly believe that.
Anything up?
She's still on my enter, asking me to enter again. Okay. Let's play. Let's play Sir Nasdaq. Not bad. It's a quick 20 points. If I was anywhere nervous, I'd be trimming or trying to micromanage already. Personally, I'm not doing that. I'm not doing that. Not micromanaging here, not taking anything off. I'm not even at break even. Not even at break even. There we go. Pulling up.
I got the need for speed.
Now I can break even because that's 30 points. And then rules
That's
say
my big
if you're trying to get 50 points, you go break even at 30 or partial at 30, but at 30 you manage. No exceptions.
I'm breaking even.
What you do at 30 is entirely up to you, but you must manage at 30. That's Elmo's world.
La 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 la.
Tell me you
La.
got in one. Tell me you got in.
Yeah, I'm in.
Sure.
Good. So started off the day with 7-point loss with reduced risk. 3 position.
I took a 30-point stop on the first one, so
30 points.
yeah, because I got a bad entry here, and then the stop was
Oh,
here.
yeah. I remember you saying that. So you should be above water now, right?
Yeah, almost.
Okay.
I took one off.
Let's get off the M1 so we don't start losing focus of what we're doing. What's going on? Where's my chart?
Talk.
Made too much money.
No. There we go.
So in this case, you were anticipating a failure at the high.
Yeah.
And what on M1 gave you that confirmation?
Nothing.
Okay.
So this is something that takes a lot of time to groom, and that's why a lot of persons think top ticking or bottom ticking entries are impressive. It takes time to groom the ability to trust your understanding. You must have seen this happen a few times when I tell you not to, I'm not managing my trade versus time when I say, hey, you have to do something here. There is no perfect explanation for it. All I can hope is that the more you see me do it and the more that you see the conditions under which I do it, that skill gets passed on. I don't see a need for this market to run this high again, but it can happen. Take a look at this, right? I'm going to show you that you understand and you can do this. Let's hide everything. Oh, you have to manage right now, right? Like it makes sense. We're almost at that level. If you're
Yeah,
here,
I've done my 50.
if you're here, okay, look at this. What we're talking about before in terms of the two setups that can happen, that spike and then that low. Remember what we said would be where we entered using this diagram here? Where's the exact price you look for an entry? Let me see if you're paying attention. In this delivery here, if you missed this, where's the exact price you would sell again?
Yeah.
Where's here?
Uh,
Show me that you understand what's happening here. Perfect. Why?
The mitigation.
Perfect. What are the chances if I move this to here, there's an entry printing right there?
Wow, that's true.
I'm gonna go to M1 because M1 is everybody's favorite time frame. Would you just enter here the moment it closed without thinking about it? No, you wouldn't. But I would.
No,
But Tish, there's no entry fractal there. And no.
You would because you trust that this is the top.
Right. But outside of trusting that that is the top, in this delivery, way before it prints, I understand that this is how a normal delivery would print. A normal mitigation delivery prints by them running a high that, for all intents and purposes, should not get run again. In a bearish example, you look at the down candle before that push, then you mark the open price and you treat it like an ICT breaker. But then why not just call it a breaker? Because I'm telling you to go short the moment it closes below that open price. But for a breaker, you would need it to get below here for that. So not a breaker. But it's easier to explain it like that, right? It makes sense. No, I didn't enter again here. I put 3 on here. I went break even there and I took 80% of everything off here. There we go. I'm probably going to hold 1, not all 3, because even with runners, this is a decent trade.
Are you holding all the way to open or just
All
on
the way, all the
Tuesday?
way, all the way, all the way.
So what you
Like-
just mentioned, yeah. So maybe somewhere up here, you've got like an OB here. You can maybe have first entry here, and you kind of wait for this, and when this closes, you can maybe you can, let's say you want to enter free contracts. You can put 1 here and put 2 here, and then of course manage down here. Would that be a valid approach to this?
Absolutely. But then here's the thing about seeing it live, that you have to define it first for it to make sense in real time. In hindsight, we could look at this and everybody could say, oh, that's a high. If we put an order block there and we CSD, that's a short, right? Does that make sense? That makes sense to everybody, right?
Yeah.
Right. In real time, when the market is printing there, how do you determine? And this is a question that you know, but you don't know that you know. In real time, how do you determine if you sell this before a CSD? No idea, right?
no idea.
But then when I tell you why, it's going to make sense. Okay, let me ask you a question. If it's pulling up to this high, what's the first thing that says don't sell it?
Closing above it.
Okay. And then somebody's going to say, oh, if it's not closing above this the first time it gets there, and we know closing above here means higher prices, not closing above it means we can sell. But then here's the fun part about what I've been trying to say all this time. I don't care if it tags me at break even. I really don't. The first time a high or a low prints, this is the low of the delivery. This is the high of the delivery. PD arrays print not in the delivery to the level. It prints like that. That's why your PD arrays print. And that's why you go short. This process is clear to everybody. But is it clear when it looks like this? Duplicate. Duplicate. So this is bullish, so we have to put this higher. Want to make it a failed expansion, so I'm putting the body below the high. And then I'm leaving this a wick. And let's say since this is down, I'm gonna call this a down candle opening right there. So the wick on this must be lower. I'll be hit. This right here is this pattern or fractal or whatever. So if you understand this fractal, this should make sense to you too. This is the high and the low of the range. This is the high and the low of the range being run. Well, the high being run. So your P areas are being formed in here. So your entries come in here.
But Kish, isn't this like demanding failure?
Is it?
I mean, aren't we like demanding that it shouldn't close there?
So here's the thing. Here's the thing. Maybe it's a little bit demanding, but it should be fine because markets pair liquidity. So if that's the high and that's run, everybody knows that's the order block or that's the order block candidate. What if they put an order block candidate, pull back, no CSD, then they close above? What does that say about this order block high? Breakaway gap or an FPG is going to print right there. So if I know closing above the stop run or the purge creates the continuation setup for higher prices, then by process of elimination, not closing above that equals this. And this is what tells you when it's okay to be degenerative, when to sell, when nothing else makes sense to anybody. Like, why in the world would you sell that? Oh, because this is there and I know what that means. That's what trading is. Reading the information the candles are giving you and then making a decision. And that's how we get paid. But let me just check if this with my runners, because I know spreads is real. Nope. All three runners safe and sound so far. I would have
If we
liked,
were to make a decision again, it would be at the high and the low, right?
if I'm going to make a decision again, it's going to be on M4, squarely on it, not closing above that blue line. M4 closed above that blue line, and Nasdaq can leave me alone.
It closed above.
Well, Nasdaq can leave me alone. It's that simple. We can now anticipate that my runners could, but I'm not going to be an emotional child and start. I'm already trimmed out. Doesn't really matter. I'm not going to introduce that type of emotional trading in my system again. Been there, I've done it, and I don't like it. Amen. So now I'd like to see them stay below that. but I'm not going to be at the charts actively watching. When this candle closes, we're going to think about closing up shop. We took 2 trades. One was an acceptable loss. There's no more need to talk about what happened here. Next one was beautiful. That was good. I've been away for a long time. Has there been any discussion about M4 instead of M5? So let's put it like this. There's a lot of things that I would love to continue doing or continue talking about. But to be frank, the motivation is just not there. You know, there are very few persons who actually talk to me and show me what they're going through to inspire me to want to talk to persons about trading. So those are the persons I talk to. If I'm supposed to do a live call like this, then it has to be stimulating to me at some point, in some way, shape, or form. So unless it is that you want me to stimulate you to stimulate me by charging you, then bring some good conversations to the call. I don't think that's too much to ask for. Share charts. Let me see what you're going through, and then if I can comment on that, we would likely have a conversation with it on the call. Outside of that, it's almost like me pushing something on you that you don't want. I don't have a whole lot of time to be giving it away for free. Well, not for free. The free doesn't matter. If I'm sharing live calls like this, right, consistently, talking about stuff, and there's no, hey, I tried that thing that you said, it didn't work. Did I miss something? Or I tried that and it worked, and some feedback. That's why I always say that you inspire me to do videos. If there's no inspiration, then I really don't want to do any videos. It's that simple. That's why sometime, maybe 2 weeks ago, somebody posted something, and I'm like, yeah, keep posting the charts. When you post charts, I see that you are, you're interested. There we go. So my runners were tag break even. I feel zero about it. I expected it since we closed above here, as I mentioned before. I'm not going to go and justify anything here or why this must go lower or will, should, whatever, because of this. There's a high and low that we're looking for. No, both sides are swept. This is not screaming one-sidedness. I'd rather a FEG down here for more selling. So while I'm going to walk away from the charts, I'm going to set an alert because that's what professionals do. Set an alert for this low. If it gets triggered, I will look at the charts and see if something happens. And as Mon is pointing to, if the FEG prints here, then I leave it alone. But I can already see that this is here, and I don't want to be a buyer because I'm calling the top of whatever Nasdaq is doing.
I mean, on the daily, remember we had that discussion?
1 second. Oh, and Bitcoin is also pumping real good. So maybe, just maybe, we don't get a sell-off today, because usually Bitcoin moves before Nasdaq. So Bitcoin is reaching higher. I'm less interested in a prolonged Nasdaq short, but I still think that it is possible. Very, very possible. Again, gold and oil. No CSD here, so the money hasn't gotten into oil yet. Gold, pretty irrelevant. I'd like to see gold trade lower. But yeah, for all intents and purposes, my day is done. If I don't get an alert, I will leave the charts alone. Let me show charts, analyze it, and go back. All right, I like that, Jason. So that's why I'll always share charts, because I know that, yeah, Can you put SMR and ONS levels on your live calls? Um,
I don't think that's a good idea. Not personally, I don't know.
huh?
Not sure if that's a good idea. I mean, personally, that would be like,
Not the biggest fan of that brand of.
so Kish, here's my take on why maybe, some people are, I don't know, quiet or not sharing that much. So even though you do top-down analysis, at heart you're a scalper, right?
Say it again. I didn't hear the last part.
Even though you do top-down analysis and you
Mhm.
stay at the 4 minutes, etc., you are a scalper. You go in and out quick. So on days like when the bias is wrong, you get away easily because you're extremely good with entries and with taking partials, etc. But for people, slower people like me, maybe a few
No,
others,
it's not true.
that not entering exactly what you do could be a win for you and a break even or a loss for us. So in a sense, it's like through the months and years, it's like I've been, slowly going into the scalping mindset. But usually when we get our bias wrong, it's like when I bleed. And, that sometimes it's like, that sucks because that could be a win day, but it wasn't in a sense. I mean, it's hard to explain, but
I think I get it.
in a sense, I feel like me personally, and again, it may apply to others, like I'm trying to get the precision that you have, and I can't, of course, probably won't. But in the past when I started, I just traded the 15 minutes and I wasn't making money. But I don't know, the pressure was different. So in a sense, I feel like we're trying to emulate you, and it's not. I mean,
So
sometimes we can when the bias is right, etc. But more often than not, we just can't, and we take losses, etc.
okay, all right. So I have a few comments.
Yeah.
Comment number one is, do you think if I shared more higher time frame based analysis, so not just reading it on the lower time frames, as you said, because that's my strength, not just reading it on the lower time frame, but kind of framing higher time frame narrative to kind of strengthen why I will lean on a particular lower time frame direction. Do you think that would help?
Personally,
Genuine question. Genuine question.
yes. I'm not sure if that would help, honestly, because I was listening to you, and that's why I took a second to answer. Personally, I think that you are a better executor than reader, because let's say, for instance, today we had a rundown and you made a lot of money on that. But as of right now, the bigger movement happened to the upside. So you were, quote unquote, wrong, even though you made money, because we were expecting a close below the FBG, and we were expecting this, right? So even though you were wrong, you made money. So I think you're a stellar executor. You take trades even with the wrong bias, and you make a lot of money, and that's your forte. So
Okay,
I'm not
wait,
sure.
Pause. I
Yeah.
just want to make sure I
Yeah.
I get you out of a possibly detrimental mindset. We're all
I'm super
familiar with
positive, by the way.
ICT. Huh?
I'm super positive, by the way. I'm not
I no,
being.
no, no, all good. Oh, no, no worries. No, I don't
Yeah.
mean it like that. I don't mean you're a negative person.
Yeah.
This is what I mean, right? I did not invent trading. I may be good at it, but I did not contribute anything outside of the videos I've posted to trading, which means the bulk of my understanding comes from somebody who was before me. And in this case, it's two persons, Heaven, my mentor, and ICT. ICT was way better at communicating technicals, and Tevon was all psychology. ICT taught one thing, like there's so many things, but I want to pick one thing right now. If the daily candle looks like this, and since this color is peach looking, I'm going to say it's a down day. Okay?
Yeah.
What you want to do is not necessarily know how to short the high of the day and exit here. That's not what you want to do. You want to be able to identify a high probability expansion that is likely to happen next. That expansion could be when this wick is being created. It could be when something is happening inside here. It could be when the high of the day is being created. How the day closes is irrelevant. But then we as traders, we like to look at the fact that we had a beautiful short on a bearish day or a beautiful long on a bullish day. I don't share that sentiment. I don't share the idea that says on bearish days or on bearish closing candles, I need to have had a beautiful short in here to be comfortable. I just need to frame something inside this entire delivery that is highly likely and expands in my favor. So we can all clearly see that this is a much bigger move. Yeah, much bigger move. I'm gonna go to M1.
I think we're not seeing your chart or your
Oh,
drops.
oops. My bad.
Yeah, I realized you were, pointing something in the daily, but it was good.
You're in the wrong charts here. Let's look at this, right?
Yeah.
I went short in here. So this is saying 530. So all the way down to 480 would have been 50 points. This is a 50-point expansion in my favor from the level I anticipated it to form. The day went higher, or the delivery is currently higher. Is this 50 points better than this 50 points? No.
Same money.
Same money. Exactly. So if we could choose one skill from trading, it would be to identify how to trade from a particular level or how to determine what level the market is likely to expand from and then towards. The expand from is way more important than where it's going to expand towards, to be honest. Because if I know it's going to expand from here and I don't know what direction it's going to expand, we can all say that we know what a bullish setup looks like at the high and what a bearish setup looks like at the low. So the direction is irrelevant. If you want to get the absolute high or the absolute low, then direction becomes important. Fair?
Yes. May I add something?
Sure.
So I absolutely agree with that. So that's my point, saying that you're excellent at executing, because exactly, if you want 50 points, you could care less about what the daily looks like at the end of the day. You got 50 going short when the day ended green, no problem. But the thing is, and again, I've become, better, and it's not happening to me, but I remember in the past, let's say you got this shot, right?
Mhm.
And the anticipation is that we're going to close the FBG and then we're going to keep, shorting. So maybe I'm not as fast or as confident as you, and I don't get a short here, but I get this displacement and I'm shorting here. So it's a loss when there were a lot of points on the table. Again, I took the show with you. This is a great day. I made a lot of money, all good. But I'm thinking about, because I fully agree with you that you need to be stimulated in order to keep sharing and to keep this alive. But maybe I can see people being, silent and suffering on the inside, because they could be thinking, okay, yeah, this is working. Look at this displacement. We're going down, and they shot here, and it's a loss. And that's painful to some extent.
I understand.
So that's maybe what's happening to some people not sharing that much.
Okay.
Maybe again, it's not happening to me. Maybe just thinking out loud.
I've got something that I can share that can maybe bring a little light to something that I'm struggling with,
Sure.
if that's all right.
Yep. Can I hear?
Yeah, so my problem that I'm having right now is pretty frequently I'll catch like the move of the day. My direction is right more days than it isn't, but I'll take like one or two subpar, not great trades, and then I'll catch like something pretty nice. So like I caught this. Oh, I draw. I caught the long to that black line. I don't know how to draw on here.
This
And
one?
then
Or that one.
yeah, the retrace to the black line. So it goes down. Yeah, right there. I bought right there,
Mhm.
and I caught that, and I ended up like slightly down on the day. But then I keep taking these like two trades in the morning or a
Wait, wait,
trade
wait, wait, wait,
before.
wait. Pause for a second. You
Okay.
caught the long and ended up down.
Yeah,
Because of the trades he took before, I think.
yeah, because of the trades before.
Okay, okay, cool, cool. I was under the
So-
impression you just got on and took that setup, but yeah, continue.
Yeah, so I made money on that, but I always take these like subpar trades before, and then I'm like break even on the day, and I'm kind of frustrated and yeah, I don't really know what to do.
Okay, that's logical. Everybody here can relate to that happening. About 3 years ago, we had a conversation like this, and I said to everyone that learning how to trade is not the be all end all. Just like getting funded is not the be all end all. That's not the end of the road. There are elements of quote unquote successful, consistent trading that goes beyond learning new information. Okay. There's no one way to say this or put it. So I'm just going to say it as it comes to me. You have to know what triggers you into reacting. Full stop. Full stop. You have to know what triggers you into reacting. When you know what triggers you into reacting, then you want to make sure you're getting paid for the decisions you make. So if you're at a job and you know you're going to get paid for whatever decision you make here, you're likely going to be doing good work. Unless it's a job that you don't like, good work or bad work, you get paid at the end of the day, it doesn't matter. Trading can't be like that. You can't look at trading as I come to work and then good work or bad work at the end of the shift, I'm getting paid. Because no, trading will really cook you if you do that. But then on the other side, when you know what triggers you into acting or reacting, you can say, I've looked at my past performance and I noticed that I always take 17 trades every single day. Every day I take 17 trades, then I end the day. Some days in green, some days in red, blah, 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 blah. Of that 17 trade, the first 9 trades are always small winners or big losers. I've seen that and recognized that the losses are largely happening at or before equities open. Cool? So when I look at the numbers, if every day I don't take trades at or before equities open, I'm ending the day with 1 or 2 good trades if I don't take anything else. That by itself does not tell you, go look for an order block, go look for FEG, go look for the high of the day. It doesn't. But it tells you where you're likely to lose. So it's like you're on a battlefield and you just figured out how to patch up yourself. That's the first thing you've learned. I'm on a battlefield. This is war every day. I just learned how to patch up myself. Can I stop myself from getting shot? No, you can't. As long as the enemy is there, you cannot stop yourself from getting shot. But I can patch up myself to prevent myself from bleeding out. Sounds silly. But when you think about it, when you learn how to minimize your losses by either staying out of the market or waiting for specific information before you go in, your equity curve takes a joyride higher. Everybody has gone through this at least once, where you wake up, you take 2 or 3 good trades, but you have all this time left, so you go back and then you dwindle it away. Prop traders or persons doing challenges generally, famous last words, one more trade. I wanted to make 1% every day. Today I'm up 3%. The challenge is only 5%, and it's barely 9 o'clock. One more. You know what happens? You erode profit until you break even. Then you're in a trade, equity floating red. You're thinking, when the trade gets back to break even, I'll stop. When I get back to 1%, I'll stop. Famous last words. I cannot say outrightly that you, him, her, whatever, is going through that exact same situation. But that process where you have to evaluate yourself is necessary. So what you have to do right now, in my opinion, is look at your losses over the last 3 months. Over the last 3 months, if you journal, are you noticing that you're taking stupid trades in the PM session?
Is that rhetorical or are you actually asking me?
Rhetorical.
Oh, okay.
You have to look at, like, when you sit with yourself and you think about trading, there are some things that your common sense answers for you. Like, how do you win 4 days out of 5 and end the week red? What in the world are you doing? Things like that. There's nothing that I know of that I can explicitly say, hey, this fixes that problem, outside of learning to control yourself. Like accountability. People have accountability partners, whether it's their partner or a trading friend. Be open enough with somebody where you can say, hey, listen, man, I'm up 3 trades for the day and I'm not ready to go to work. I'm not ready to go to the gym. I'm not ready to sleep. I'm not ready to do something, but I feel like I want to do this. What do you think about this? Do you think I should? It doesn't mean you need validation or anything. It means that you have accepted that this is an area of weakness and you need help there. Simple. That's why I always say don't suffer in silence. I'm positive I've made every single mistake every one of you have made in trading. Positive. Everything that you've done wrong in trading, I'm pretty sure I have done. So it gives me some kind of euphoria when I can talk to somebody about how I fixed a problem or how I got over an obstacle in my own trading. It brings me back, and I don't know. I like how it feels. I like helping people in that way. Okay.
Yeah, thank you.
A lot of the stuff that we think are fixed by more information, it's fixed by simple acknowledgement that I shouldn't have done that. I know more than enough to not do that. I don't care who's saying it. Which is why I've said this privately and publicly. I love ICT, but I'm not sitting through an ICT new concept to learn anything from ICT. I don't want to learn anything new from ICT. With all the love. With all the love. My process and how I approach trading on a day-to-day basis does not need new information. But I still take losses from time to time. I don't attribute my losses to lack of information. I don't attribute my losses to I need more time stuff, Tobias and Parson needs to call me. I'm just saying, I attribute my losses at any point in time to something I did. Either it's a case where I hop to the charts real quickly and I see something and I'm like, okay, this is bullish. This means bullishness. So look for a setup here. I don't get confirmation for bullishness, but I still go long and I take a loss. I don't need to take 10 losses on an analysis that failed for me to know I'm wrong. Old folks where I come from say you don't need to drink the entire seawater, like the entire ocean, to know that it's salty. First sip, yeah, nah, this is not for me. That's why whenever I'm trading, I always tell you these things and I say them in advance. This is what the setup needs or the analysis needs for max confidence. You could look back on any call where price printed exactly the way I wanted to, with all confirmations how beautiful that trade was. And you can look at all the times when not everything I wanted printed. Whether I got a good trade or a bad trade is irrelevant. The confidence for sustained move wasn't there. I ended my day early. Or I stepped away for an hour or two and I came back afterwards. If the same analysis I had in the morning is not confirmed at PM or noon, then what am I trying to do? Just get a trade? Then what's the point? There's no point in doing analysis if you're just going to take a trade. That's how I look at it. So if today was a red day, I understand. I'm not going to apologize for you having a red day. What I'm going to say is try to get rid of the need or the urge to be in a setup and start focusing on why we should be in this setup. If I plan to do this all August, as long as my life allows, I plan to do this all of August. If there is anything that I can do to help, I'll happily do that. Having all these, influencers or subscribers, it would be against my own view on life and humanity if I did not help you, especially if you're supporting me. I mean, I'm not a YouTube influencer where I'm going to tell you that like and subscribe. But if you like, you like. If you subscribe, you subscribe. If you comment, I remember your name, stuff like that. But I'm not going to force you. And if I say, share with me so I can see what you're going through, and you're shy, so you don't want to share it publicly, and I say, share it in my DMs, but I'll reply when I can. And I'm not sitting here as customer service waiting for a text message. If you are okay with the fact that my intentions are pure, I will communicate as much as I can to the best of my ability, then you should not have that ego that says, I don't need anybody to help me. Well, if you didn't, then you wouldn't have, you understand what I'm saying? Without going into all that, I'm trying to ruining the atmosphere. I'm here to help as best as I can. Post whatever it is that you're going through in the chat. Come to the call. Be willing to share your screen to get your point across. Be willing to share a chart. Be willing to talk about what you're going through, whatever. Only way I can help you is if you talk. These calls should not go over 45 minutes. Why? Because Zoom has a subscription and I pay for that. My intentions are pure to help you, but I pay for the tools to help you. If you follow, not blindly, but the analysis on the calls, my assumption is that you make money the same as me, which means if you continuously want calls that go beyond 45 minutes, it shouldn't take me saying support Patreon, click like and subscribe on whatever the videos are. That's just your way. That's just your way of saying, yeah, I was here, I made money too. My money is my money, but thanks. Whatever. I commit to helping you as much as I can. I am going to do the best that I can. Get that man a hands your headset. But at the end of the day, it's a business. We are all making money here. If we take losses if you trade the same thing I take every single day, every single week, it is impossible for you to end as a loser. I don't hide my losses to appear perfect. I don't share my wins to look grand. I share to show you that there's a process to everything I do, even if you don't understand the process at some point or the point I'm explaining it, but the process is there. As long as you're open to, just be human or whatever,
Kish,
would be great.
Kish,
Hola,
can you pop into the 4 minute?
you're short, right? No one?
Yeah.
You're short?
Yeah.
I know.
Yeah. So, I mean, the first one that we took, yeah, because code said sell, I sold this, right?
Mhm.
Then, I mean, if I was not on the call, I would have like waited for this, then this confirmation here, and then that retracement back to the order block,
Mhm.
and then that's the short.
Mhm.
So is it wrong? I mean, then again, I was watching this mitigation level again. So using that same idea that you had pointed out earlier, when once we took this, and then this is the first place we look for, I mean,
Like,
take out some partials basically,
yes.
right?
Beautiful.
But so isn't it better to wait for this? And I mean, just asking
Yeah, I get it.
for
No, no
those who
worries,
don't
no worries, no
understand.
worries. I'm not offended by questions, right? Even if I sound passionate in my response, I'm not offended. But yeah, I don't want to communicate the idea that it is better to enter on a particular candlestick fractal. I want to get across the things that shows with conviction that the market is going lower versus higher.
I mean, actually, the question that I had wanted to ask was we were framing from left to right, but once 840 started, then we had this purge again, right?
Mm-hmm.
So this is like the double purge again. So
Mm-hmm.
I mean, if we are looking from left to right, this is like a triple purge. So how many times would you keep looking for a purge and the mitigation level, or do you stick to one, or do you start from
Good
840?
question. Good question. If I have outline levels that I'm saying close above here means this, close above here means that, or close above here, I need to get this for it to mean something. Oh, need water. We were talking about this earlier. Close above this high means that FEG here, and that's higher prices. Remember saying that?
Yes.
Similarly here, close below here means that FEG there, and we go lower.
Yes.
What happens when we close here and it can't close above that to give it a FEG? Then we start thinking old high, close above, support structure, higher prices. Yes?
Mm-hmm. Yes.
Which would mean 9 o'clock open needs a close above it for longs. And vice versa. This low, we get this candle. You wouldn't want this to be a bullish order block. If you want lower prices, you don't want this candle to be a bullish order block. So now you could look at whatever time frame or whatever, just know what that price level is and know what you don't want to see there. If you see what you don't want to see, it does not mean this is a second chance. It means no. This is a beautiful short. I was under the assumption that this is the trade that you took because mitigation level, we spoke about closing above here, coming back, what it should do.
No, I was short from here.
Me too. Me too. That's beside the point. You remember when I drew? You remember when I drew these?
Yeah.
This is an entry fractal, right?
Yeah.
What is this missing to increase the probability? Not Moan, anybody. Not you, Moan. Anybody else?
Okay.
Time.
Something else. Let's see what's in the chat. Key level. That's it. Key level. This is missing a level for it to print at to make it beautiful. That's why we have bias, key level, delivery at the key level. You see what's happening here? Which means after 920 open, you should be short. M1, because just to show you the intricacies of the fractal. This is 920. If the fractal says after 920, you should be short, where's your entry here?
After I've closed below 920.
Amen?
Yeah.
That's
Chris,
it.
about the mitigation, would M1 mitigation be preferable here or the M4? And you use the old mitigation. Can you go back to M4, please? I
So
want to
that
show some.
question should answer itself, particularly because of what Daniel asked earlier. Higher time frame is nice.
Yeah.
I'm using time here, and time is leaning on this low being taken. So if you have a bias, we came into the day bearish. We shouldn't justify why every short plays out. We shouldn't justify why every short failed. You should be focused on if the bias is correct. These are the circumstances that will give a good trade. High, low, new day opens, it should just run. It should just run.
Yeah.
That's what everybody wants. But what if they don't run? How many times do we see them not running? What can I learn from these instances? That's it. That is it. When I say I want to see stuff, I don't move price. I don't have that kind of muscle. But it clearly outlines for me, these are the processes that increase probability of my bias playing out when the candles look like this. As of right now, I would argue that FEG stays open and this candle's high stays. Those are the things that I would like for perfection. Whatever this candle's high is, we don't go above it. Those are things that I really like, because then it validates why old levels behave the way they did and why breaking them carries so much weight. But not trying to make this a 2-hour call. Unfortunately, I think it's getting pretty close to that. So what I can say is, I hope today was seamless. I hope today you all appreciated taking a trade because everything said that it's fine and the risk is okay. Appreciated taking a trade because the logic says yes. Appreciated taking a trade later because it came back to a level and you understood what trading back to that level means. So, on behalf of TCM community, I'd like to thank you for coming out to our TED Talk today. I'll post the recording as soon as I can. Please be more social in the chat so we can, keep the community alive. I really don't want to close the community. I really don't want to stop doing what I'm doing. But,
I got dad jokes for days. Hey, real quick, not to drag you on, and much love, my friend. On that mitigation, what I've heard from a previous day and like Mohan touched on, is that you're taking partials, but then what we're watching for is if we're considering the adding, because I'm really trying to work on adding to positions.
Mhm.
It's when we get that close below, and then we usually will get like a CSD. And is that where we're adding? So we're taking partials because we don't know, we can't predict the future, or we're managing. But once we
Mhm.
see that close below the mitigation, that opening price, then that's our key. That if we usually, I think we'll see it like an up close and a down close, in this case, the CSD, and then we can add at that point. Is that logical?
Logical.
Okay.
No,
Logical.
actually,
Logical.
Kish,
Key
I
levels.
I was watching this and I was thinking, okay, I want to enter, but where would I put my stop?
So good question. Good question. Remember, bias, key level, delivery at the key level. Bias, lower prices. Key level, clear. Let's say that you're looking at this. Remember this little nuance. The first push to the key level is creating the atmosphere for your PD arrays. So I want my PD array printed here.
Okay. Now
See?
it's clear.
That's it. That right there is a lesson in and of itself.
Yeah, that was nice.
That's a lesson.
But we don't always get that 3-candle structure, right?
Of course not. That's not the only entry factor that exists, but that's the one that's easy to see because we all know that one. We're familiar with that one.
So you would always prefer push back to that key level and then take the high wicket and then we enter the next one.
So there are a couple of ways that can happen. What if that key level was 2 p.m. open up here? Let's say there was a 2 p.m. open. Where's 2 p.m. as a matter of fact? I don't remember. Or below us. Okay, cool. Humor me. I'm just gonna take off everything. I apologize. Let's say 2 p.m. open was somewhere here, blah, 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 blah. This is not going to be drawn to scale because I'm eyeballing it. So please don't crucify me. What happens if you see the market do this? First thing you're thinking about is reversals, right?
Yeah.
Like a crazy person. Know that I tell you, the first push towards here is where your PD area should form. If a down candle prints and the market goes below that, you're looking for FVGs here to support lower prices. What if it goes through the level? Same thing. You're looking for your order block there. If they close through the order block, FVG here support lower prices. So what happens if they get this and the FVG prints and they close above it? You go back to the order block and you look for them to reclaim it and then push. And that's another lesson. And that's how we end the call today with a banger. So don't go giving your money back. I assume you have runners and you're all smiles. So
One very important recap. We have bias, we have key level, we have delivery. Where is the coin flip?
oh
right.
man,
Ooh,
I'm gonna
shots
have to
fired.
consult the trading gods for that one.
Never. All hugs. Love this guy.
All right, guys. See you tomorrow. Same time, same place. Don't go
Respect, big
giving your
man.
money back.
Thanks, Kish.
you.
We'll see you tomorrow.
Cool.
Thank you, Kish. My dog says hello.
We need more dog pics, Daniel. Dog pics.
Ah.
I'll send them right away.